Hello traders, welcome back to the channel. Ignas with you from Daily Pips Trading, and we're looking at another weekly outlook. We're looking at week 26 to be a little bit slow to begin with, Monday being a day off because we're missing any kind of economic news calendar events. Tuesday and Wednesday are a little bit slow for me as well because we only have CB consumer confidence event happening on Tuesday. My expectation for the majority of the risk to go into the market is for Thursday and Friday trading. Every single week I sit down to do my analysis. Time is a lot more important for me than the price itself. Why am I mentioning this? Because June futures delivery contract is expiring. Has expired for some of the trading pairs, is expiring the upcoming week for majority of them. So we're shifting interest towards September. We're moving away from, for example, ZBM, which was Treasury Bonds M being and standing for June delivery contract. We're moving into ZBU, which is September delivery contract. The same thing is happening on Nasdaq futures, gold futures, Euro futures. Every single futures delivery contract that we were trading on June, we are looking to move away towards September. So keep that in mind and then adjust your charting, adjust your analysis towards September. And if you don't mind, leave a like to this video, subscribe to the channel. Passing by the Discord community itself could be a fun endeavor to do. And let's dive in. Let's take a look at what the markets are looking to do this upcoming week. Starting with the markets itself, we're looking at the bonds. And for the bonds last week, I was very much interested to see this bullish order block hold in the price in one place or push it higher towards 122.02-ish because we have the most recent swing high resting above there. Was my interest given? On paper it was. The only thing that I'm not very keen about is that dollar is moving together in tandem higher, just like at the time frame itself bonds are moving higher. But this order block holding in the price for me is the most important thing this upcoming week. That being broken will shift the price towards this balanced price range. And if we break below, lower prices is my interest immediately. But initially, everything above this order block is gonna bring us towards 122 and maybe even above. Dollar index itself, I'm watching dollar, and if I wouldn't be looking at bonds itself, I would be saying that this fair value gap is going to continuously push the price higher. Am I happy with that? I would be. I have a double top here. I'm interested in liquidity being taken away from the market up there, but dangerous part about this upcoming week is this SMT compared to Euro. Euro failed to create a lower low last week when dollar created one on the other side of the market as a higher high. Yeah, SMT might initiate a short-term sell-off, especially if we close below this daily fair value gap. So what I'm watching this daily imbalance very closely. Everything above it is delivering price higher. If we fail and we start closing below it, short term at least, lower prices is my interest. Euro itself, I am interested in lower prices still delivering, sell side still resting below. Issue is that SMT that I mentioned where dollar created a higher high and Euro is failing to do that. So as long as the markets will not be in sync, I'm watching this carefully because if the price starts rallying above this imbalance, higher prices are upcoming quite quickly afterwards, right? My expectation though still, market delivering below 10600. Going to the next chart, which is pound itself, I'm interested in higher prices now. Why I'm saying this? We've been calling for lower prices and especially delivery at 1.26435. We've got this precisely. I've been calling it 3 weeks in a row or so, right after this SMT was delivering, which allowed the market to shift lower, and perfection happened last week. Every single time I talk about the markets, I say nothing random is happening in the markets. We called for Friday the 7th close to hold the market in place and allow it to go lower. Look how beautiful this is. What am I watching now is a possible run above this fair value gap. If we do that, market structure is breaking above this high, and my long-term interest of 1.3 sharp is a possible delivery right after that. But we have a few key points to get through before I'm changing my bias for higher prices. Because of that fact, I'm not touching pound the upcoming week. S&P 500, and you see by my chart, I'm coming in prepared. I'm not interested in S&P and having a real weekly bias on this security because of two things. First, because we just broke the structure. Buy side was taken, swing low is taken with a fair value gap on 4 hours chart. I'm doing a little bit of lower time frame this time. And what I'm watching right now is a possible short entry from it, right? But am I interested in lower prices? Every single time I talk about futures indices, I say not interested in a top if the structure is not broken yet. On daily chart, this daily imbalance is holding in the price. So what I'm gonna do, I'm watching for a possible break of structure above this 4 hours imbalance. If we do that, I'm interested in higher prices. Up until that point, I'm not gonna look for lower prices. Up until that point, I'm not interested in buying this. Now, on the other hand, I'm not interested in the price going lower because of this daily fair value gap holding in the price. So, if we break below it, we will offer lower prices towards 5,462.5. Yet, watch this. We have a range between a low of that 4 hours fair value gap and a low of that daily imbalance. As long as we are in this trading range, I'm literally not gonna be interested in having any real directional bias. I'm gonna be only looking for scalps of 4, 6, up to 10 handles on S&P 500 throughout the week until the point that my analysis pans out. Nasdaq looks very, very similar to ES, but it has a little bit more precision. Daily liquidity taken, break of structural right below this low, fair value gap opening. All good. If we would be looking at that, we would be calling for lower prices from this, right? At the same time, we have a 4 hour imbalance broken, meaning we are inverting. A lot of you have a model actually where you try to trade YouTube 2022 entry after a break of structure with a 4 hours inversion. We have exactly that. If that's your model, your drawn liquidity is down below at 19,760.5. Knowing the fact though that S&P is kind of in a no man's land, I'm gonna focus on Nasdaq this upcoming week. Lower prices is gonna be my interest up until the point we break above this imbalance, all right? So let's watch lower prices together. Really quickly about bonus pairs that we don't really engage too much during live streams, but I'm still watching higher prices on Bitcoin. I'm expecting this daily imbalance and especially this order block to hold in the price for 75,000 to be delivered. And if you're interested and if you want to learn, try to do some work on gold. Take a look at 2,265.5-ish. There's a double bottom there. Try to watch that this upcoming week. If it delivers, we're gonna have some fun analyzing it on Discord. So, this is it from me for today. I hope you find it insightful. If you do, please don't forget to leave a like to this video. It would mean me wonders if you do that. And if you have any questions or any pairs that you want me to take a look throughout the week, don't forget to comment below. And I'm gonna see you next week on another weekly outlook. Bye.